Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, November 7th, 2018. I am Frank Ochoa, aka PivotBoss. Good morning, everyone. Here's a look at the ES after Tuesday's elections here in the United States. We saw the Democrats take the House, Republicans hold the Senate, and again, that was the likely outcome here. And from that, it could be a little bit of weakness that comes from it, followed by overall strength down the road. And that's something that we're going to be watching for here. How is the market going to react here? Overall, it's been a continuation higher. It's been a steady squeeze from the recent lows, but now we're coming into a very important level. The most important level that you should be watching would be the 2791 level. 2791, it's the inside 25% key level. It has been resistance, 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 and then it took a bid here and took off. It came back to that level, tried to hold above it for a whole day and failed. We're back to that level after a large squeeze here. If this market were going to turn down and retest those lows at some point, again, this would be the key level where it would turn down from. It did it many times after bouncing from those lows earlier this year. It turned down also, and that was a much bigger return back to that level. The higher low also rejected and returned back. That level has been fierce. It was only bid for one window of time, July, August, September, and then it went offered, and now it's below that level. So 2791 is the major level to watch here. If there's any rejections at that zone, we could see some pullback, some magnitude of a pullback. I would say 2700, 2703.75 could be a high probability target, and then from there we could see more trading range action as this builds up for either a move higher or lower. But right now, watch that level for signs of rejection, as it could lead to a pullback toward the monthly lows. All right, let's take a look at the ES, rather the NQ. The NQ here follows the pattern of the ES as well. We've had quite a bounce from the recent lows. We had a rejection last Friday, but we've pushed through it here post-election. And now you can see here the prior high is right here. That's 72.14.5. And that level is kind of like the 2791s in the ES. It's a very important level here that has had a change of bias. You've seen a period where it traded above it, and now it's below it. So that's the big level here. We've pushed higher. This is the midpoint of last month's range right there, and then here's your 72.14.5. So again, if price can't get above that zone, that's where we may come down and retest lows or pull back by some measure. You know, do we get all the way back here? Again, it could only be, you know, a 2-day move that gets us down there if this market really wanted to. So again, I think the key is going to see, can it get back above the market structure level here of 72.14.5, and if not, that may mean another dip down to come. Above that level would open up much more strength, and that could open up, you know, again, an easy return to highs followed by a push to new highs, and that's the same case in the ES. Above 2791 can open up a move as high as 3K in the next 2 to 3 months. So again, got to watch those key levels here over the next couple of days. All right, let's take a look now at crude oil. You can see here crude oil has had a nice little bounce here today, rallying in after hours and overnight trading, holding above the 62.70 level, which is kind of a key CLVN that we've been watching here. Overall, this market has been extremely bearish. It has gotten back below the key range low here, and I mentioned before that this is the best spot. It offers the best opportunity for bulls to look to get long at some point for a shot at returning price back up the channel, but likely back to 69.34 as a high probability target. So right now we're looking for signs that this thing could push higher. It has a nice little 2-day range that it's developing inside. You've got the 63.91s. We haven't quite seen rejection down here, but we could continue to trade down here for another 2, 3, 4 days before we see some sort of stop run day perhaps, or a rejection that leads us higher. So again, I still think that this is the right spot to look for a potential buy opportunity. If there's any failure to hold or establish acceptance back above 63.91, then that pullback could be another selling opportunity to the 57.47. That would be a huge move, but again, not out of the realm of possibility. 56.83 here is the FOMC key level from last December, and again, it's an easy shot to come take out the lows for the year right into those lows here. So again, this market doesn't have to turn higher. This is a great spot for bulls to look to be long at some point if there was a rejection or a stop run day back above. But if there's any failure here to hold above 63.41s, that could be a sell the rip opportunity for a pullback to the yearly low and into that FOMC key level of 56.83. So again, we got to continue to watch this, but it's been very, very bearish. It could continue to get bearish, especially if price can't reclaim 63.41. Let's take a look at gold futures here. Gold continues to develop within a very clear, rounded type of pattern here, an accumulation pattern that has formed off of these lows. Very clear resistance at the 1240 level, 1245s, however you want to define it there. But overall, this is very, very tightly compressed, and at some point, we're likely going to see major expansion. And we're likely closer to that point now than we were back here. There's nowhere really to go from this point on, and we have kind of rounded off. We either need to shake out really hard to 1200 to try and get back higher, or we need to start breaking out to the upside, or whatever the case might be, breaking to the downside. But it's getting closer to that point where something has to happen. I still believe in the upward bias here as long as 1210 remains intact. We could still come down here, shake it out, and bounce. But any failure to hold 1210, 1200 could be very, very bearish. And again, the downside target in the bear case would be 1124.80. All right, let's take a look lastly at, let's look at Bitcoin. We haven't looked at Bitcoin in a while. This one continues to be very, very bearish overall from a standpoint of not being able to bounce, not being able to push above a prior pivot high. It's barely hanging on to a support level at 6K. It's so apparent, and you know, again, there's not a whole lot here to like. You're really just kind of in a waiting game for an ETF perhaps that would send this thing much higher. And even if it did send it higher, how much higher? You know, does it get back to 8,000, 8,500? Can it get back to 10K? I mean, I don't even know if that how much it can go right now, but the point is it continues to be extremely compressed. And as it does that, there's nowhere really to go for this market. It needs to, at some point, go. And if it can't go up, sometimes it needs to flush down before it can go up. I've mentioned that point many times. And right now, it's a short-term up move that's retesting 65.10 from below. That is the 926 FOMC key level. We are going to get another FOMC key level tomorrow, Thursday, for the FOMC meeting and the Fed interest rate decision, and that will give us another key level to watch here moving forward. But as of right now, this thing continues to compress within a very clear range of 6K to 6,800, and nothing's changed until something changes. So we'll continue to watch this one as well. All right, that is it for now. Good luck, trade well, and I'll see you in the trading room.